Good morning. This is Butch Shorak, Options University, Monday, April 30th, 2012, the very last day of April. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. With that thought, let's talk a bit about the week that just took place. It was an interesting week in that it all took place right there. FOMC meeting begins, certainly capable of moving the market. Interesting meeting in that Bernanke basically came out and stated that the FOMC is prepared to take additional actions, if necessary, to take whatever is necessary to make the economy work. This was regarded by many market participants as a real sign that further quantitative easing is not off of the table. They also stated in his further meeting at 2:30 that they basically did not expect to raise interest rates until 2014. We had other information that came out during the week. We got mixed reports from the consumer confidence in that consumer confidence came and disappointed. And then on Friday, consumer sentiment came in and surprised to the upside. So we got some mixed information from them with regard to that. We also on Friday had GDP. GDP disappointed as far as the numbers that we got out of it for the first quarter. And of course, we always get our Thursday morning jobless claims at 8:30. And those jobless claims, expectations were for 373,000 new unemployment claims. Turned out it was 388,000. So for the week, the economic announcements were not great. They were not bad. They really didn't affect the market. As a matter of fact, there's only one thing the market was interested in for the week, and that is Apple. And Apple came out on Tuesday after the market, and we'll take a look at our charts and see what kind of effect it had on the overall market as we saw Apple rules. All right, let's take a look at the week that's to come. And as we look at it, we see that we have manufacturing reports with the Chicago PMI. We have motor vehicle sales that comes out on Tuesday. More manufacturing, the ISM, construction spending. So we're seeing, exactly what's going on with manufacturing and construction. ISM non-manufacturing is coming out on Thursday. And of course, we have our typical jobless claims that comes out on Thursday morning, which is disappointing as of late. The AAPL employment report, which comes out on Wednesday, and of course the granddaddy of them all, the one that everybody will be watching carefully, is the employment situation for the month for the first quarter that will be coming out on Friday. Basically, we'll be pointed to that. On the international scene, we're seeing Europe being downgraded by the S&P. Very little market reaction to that last week, and we don't expect that with that we're going to get a lot of movement out of the Euro challenge anymore because of the fact that they are now at least dealing with their issues and supporting their banks. And for a long time they were in denial, and that's where the real issues came in. As we look at the S&P, we see that for the week that just took place, it certainly had a nice little upcycle to it. Notice that we had been in that stair-stepping level where the market was stair-stepping up. We've been out of that for a while now. And basically for almost the last month, you see that we've been in a sideways motion where we're trading between this upper range, up around 1425. That's just a rounded number. And down here, right around 1360. And that's been our trading range as we've gone from an uptrending market to a sideways trending market. And so things move a little slower when we have a sideways trending market, but we still within that market have cycles where we have up cycles and we have down cycles. And those cycles are what we are playing when we're working with our weeklies and working with our monthly options to be able to pull money out of the market. Let's take a little closer look at the S&P for the week, and we see that here we are. Here's Monday. Monday was the day we bottomed out. Basically, the week started out quite soft as we went down to that 1358 level, which was the monthly low for the S&P, and then we started getting our candlesticks. This is Tuesday right here, and on Tuesday was the day that Apple announced, and we see that during the day we ended up with an inside day from Monday, and then as Apple announced Tuesday after the bell, the market just took off. Market's been leading the market. Apple's been leading the market up for the last year, and so it didn't look any different this particular earnings season. And now what we're going to see is Apple going to lead the money out of this zone, or are we going to trade in this zone until the end of May? That also is the other possibility. So market's moving, things are moving. Apple, there was some question as to whether it was going to have a decent forward look. And we see that the market liked what Apple had to say, as we saw Apple gap up 50 points on Wednesday morning. All right, with that, let's take a look next at the Dow, and we see that the Dow, which also is trading in this sideways trend, after having traded in an uptrend for the last 7-8 months. And we see that it's at the very high of its trend at the end of the week. We went into an upcycle. It also moved with Apple, and we'll see whether it breaks above this level. We've got a single top, a double top, and a triple top. So don't be a bit surprised by a breakout by the Dow, as it is approaching that level again for the third time. Triple tops many times will break out. That's one of their characteristics. NASDAQ, which is the market leader, of course, for the entire year, it doesn't look quite as strong as the Dow, as it's trading within its range and did break out of this earlier spot of resistance right here on Friday. So we see the NASDAQ beginning to break out, headed towards that previous high up here at about 31.25, highlighted by our yellow zone. Look for the NASDAQ to continue on up. First level of resistance is going to be up at this level right here. All right, so with that, that's the NASDAQ, which we certainly can carry the market higher. Russell 2000, which has been the weaker of the markets during this entire time, went into its sideways trend much earlier than the other markets did. Actually went a little bit lower than the other markets, as it had no problem clearing that 50-day moving average, which is our blue line there. And we see that it actually had a double bottom. Now moving up with the rest of the market, headed for those previous highs. First resistance will be at the top of the yellow, which is at 830. And then, of course, we'll see if it heads towards its yearly highs up to 850. So, in an upcycle, moving up, as we see the Russell participated in the overall move after the Apple earnings. Not a big surprise, and we'll see whether it continues on up into those previous highs. As we look at the week that was, let's see what the changes were for the week. The Dow was up about 200 points. Percentage change for the week was 1.5%. Year to date, up 8.3%. That's a whole year's worth of movement out of the Dow. So don't worry, we will have our summer pullback. I'll be shocked if we don't. That generally comes at the end of May. So be prepared for it with your portfolio. Know when you want to get in, when you want to get out, and so on and so forth. NASDAQ up 68 for the week. Notice the Dow was up more points than the NASDAQ was. NASDAQ showing a little weakness, up 2.3% for the week though, and we see it's up 17% for the year. Nice double digits move for the NASDAQ for the year. S&P 500 up 24 for the week. Big move out of the S&P, as we saw it bottom out at its monthly low, while rate for the week up 1.8% for 11.6, back into the double digits for the S&P. Russell 2000 up 21 points, up 2.7 for the week. basically ended up being the biggest mover percentage-wise for the week, and caught back up with some of the other indexes as it's back into those double digits, up 11% for the year. So all of the indexes showed a strong week, one of the stronger weeks we've had in the last 6 weeks, as we saw general movement in all of the markets based upon Apple's earnings. As we saw, if the market goes up, we basically expect the VIX to go down. That's exactly what happened as the VIX continues to trade in this 15 area all the way up to the 20 area. That's where the market and the VIX spends basically about 85% of its time as we look at yearly averages. VIX going low, and so we're bouncing up, and we'll see how long that bounce up holds before we go through another one of our down cycles. That's what markets do. The bond market actually went back up into its normal trading zone where it had been trading much of the year, and we see it's back up into its yellow zone after a bit of a pullback as the market pulled back, which was basically led down by Apple, as there was some questions about where Apple was going to go for its second quarter outlook. Let's take a look next at the financials. We see the financials went into an upcycle, continued on up as the overall market did, and so we're basically sitting right now at that 30-day moving average. We'll see if we head for that level of 16 on the XELF, which is the ETF for the financials. Taking a look next at the oil, and we see that oil, which has shown a little weakness except at the pump, did pump up a little bit as following the overall market. Haven't seen much change in the pump though. It hasn't been getting more expensive. It hasn't been getting cheaper. It's kind of been hanging out there, and we'll see if oil can end up with that $2.50 a gallon that Newt Gingrich was talking about. It'd be kind of interesting to see that happen. Good for the American public. Gold, well, as we look at gold, we see that gold headed up with the overall market, trading within this zone. We can expect that it's going to get right up to this level, which is the top of our yellow zone, and then we'll see what it normally does, whether it's going to break out or whether it's going to start bouncing back down. So potential to take a look at GLD as it gets up to that level for some potential call credit spreads. All right, next let's take a look at the spider, and we see here's what the spider looked at, and you see we have a couple of gaps here. This gap looks like it was filled on Wednesday, and then we've got this gap sitting right here. Remember, these gaps always get filled. The market will come back and fill this gap. In the meantime, it looks like, looking at this, we're heading on up to that previous high on our ETF, which is a ETF for the S&P 500. Notice basically that the volume was right around average, so no big movements, no big volume surge to tell us anything about any particular price. It came down, hit the bottom. That was a little bigger day than the other days, as it kind of had its buying or its selling climax. Notice we also ended up with that long tail on that, which is characteristic of these climaxes. And then we got our buy signal the next day as we got a higher high and a higher low. So good week in the S&P, and it was basically led by Apple. We've got a whole list of other stocks that we're going to go through for those of you that are gold members. And so for the gold members, stick around. For the rest of you, thanks for being here with Options University. And if you would like to see more free videos, you can go to www.optionsuniversity.com/free gold, and there will be other videos there for you to watch. Interesting week in the market, and of course, there's never a boring week in the market. For those of you that are gold, hang on. For the rest of you, thanks for being here. This is Butch Shorak, Options University, Monday, April 30th, 2012.